Please visit tradingsim.com to simulate this trading lesson. Hey day traders, this is Al Hill from tradingsim.com. Today we're going to talk about the 38.2% retracement. There's a lot of numbers in Fibonacci, but one thing to point out about the 38.2% retracement is that this is a requirement for the price action to hold this in order for it to still be considered an impulsive move, meaning that the stock's going to continue much higher in a beeline or straight line pattern. And the example I'm going to show you today, it did breach the 38.2% retracement by a hair or two, which again means that it's probably going to go higher, of course, but it may not have the explosiveness that you're looking for. But just want to give a very basic example of how this Fibonacci thing works. So again, you want to select the Fibonacci retracement from the tools section on tradingsim.com. Then you want to go to the point where the actual move started. A lot of times people try to use the low point, but you really want to use the starting point for the move. So if you look here on Huntington HBAN from May 26th, you take this up to the high, right, of this pullback, which is approximately, somewhere around there. Yeah, right around 617. You fast forward a bit, keep this going. So you can kind of see we came down here right around the 38.2% retracement. And the key thing to point out here, right, is that you have the 38.2% retracement with the gap support here as well from the morning. So when you're using Fibonacci, it's always a good rule of thumb to not trade the Fibonacci's, just trade straight off the Fibonacci's, right, because these are just retracement levels, right? There's no indication whether or not it'll stop at the 23.6, 38.2, 50, 61.8, 100%, whatever, right? There's no true indication. So what you just want to look for is to make sure that there's some sort of confluence or some other factor that's in play at one of these key levels, and that'll give you a little more confidence to say, hey, well here, it's a 30.2% retracement in conjunction with the fact that we have the gap here on the morning. All right. So in this example, you can kind of see that, okay, stock comes up, hits this level, and then slowly after that, I think it kind of plays around here a little, and I think it actually tries to come down through here shortly. Let's keep an eye on this for a sec. Yeah. So you kind of have it come down through. So you can see here, the shorts tried to bust it down. They were able to, the bulls, to hold this level. So here would be a good position to take a long, right? So we could take a long here. Let's do 20,000 shares at market. Average price 604 with commissions. And then what you can do is you can put your stop market order below this candle here. That way you're just not in here indefinitely, right? Let's put a stop market in for the 20,000 shares at 590, call it 594. All right, so we have a stop market in, which also coincides with the 50% retracement. So now you kind of have your position, you have your risk. You're risking 10 cents, and then you just go from there. All right. So the key again, you have the retracement level here. I know this chart's getting a little muddy with lines and whatnot, but you do your retracement level here down 38.2, which also coincides with the morning gap, and you can take your position. And now you just sit tight and you let the law of Fibonacci, right, the magic that is Fibonacci, play out in your favor. All right, so now you kind of see this is kind of wicking up here at the origination point, or rather the high from the morning, and you're in the middle of the day, right around a key reversal time at 2 p.m. So this will be a great time to just get off the bus, right? Make approximately $2,000 on 20,000 shares, and you just step away from it. So first we need to just go ahead and cancel this stop market order. Let's come back over here and just sell this out at market. Out $2,000 profit. So again, you have a gap up. You come back, test the 38.2% retracement in conjunction with the gap. You enter your long position here, Put your stop down at the 50% retracement, since the 38.2% retracement just held, and you look to see how the stock will act up near the high. Key thing here that can kind of give you an indication that this would roll is that the volume on this opening gap was pretty light relative to some of the volume from the other morning moves. So that was another indication you probably need to get off the bus. Alright, good luck trading.